Hey everybody, my name is Laura Haight. I'm the president of Portfolio. Today is Friday, November 8th, and it is the end of Fraud Awareness Week. To celebrate, so to speak, Fraud Awareness Week, we're talking today about fraud's red flags. And there are fraud for small businesses is certainly a pretty significant problem. And we are fortunate that we've got Kelly Wessel. She is the CEO of Wessel Accounting, which is a forensic accountant and does a lot of fraud detection in Greenville, South Carolina. And she is going to talk to us today about the red flags that your small business should be keeping an eye out for and what the conditions are that can contribute to fraud in the workplace. So we're going to do about 15 to 20 minute presentation followed by a question and answer period. So if you have questions and you're on the Google Hangouts page, you can enter them in the question area, and we'll attempt to answer them at the end. So without further ado, let me introduce Kelly Wessel of Wessel Accounting. Kelly, over to you.
Thanks, Laura. I appreciate your moderating this event. As Laura said, I'm Kelly Wessel. I am a fraud investigator and forensic accountant, and I'm going to talk today about the sorts of things that a business owner might pay attention to or might need to pay attention to, the signs and red flags of fraud, or sometimes just irregularities or the potential for fraud. My new mantra is trust is not a control. A lot of small businesses and some big businesses get into a lot of trouble because they feel like they can really trust their employees. And I'm sure 99.9% of the time they can. They just got to be aware of the circumstances where that might lead an employee to consider committing fraud, and they need to be proactive in setting up good procedures just in case that employee has to go away suddenly, and they have to be replaced by a temp. Maybe what they do is pretty important and they need to be replaced in a couple of days or a week. Trust but verify really doesn't apply here, but the reason I put it in there is because I really thought that it was first said by Ronald Reagan, who is one of my personal heroes, but it actually wasn't originally said by Ronald Reagan. It was said by this Felix guy, a.k.a. Iron Felix and Bloody Felix, who was a Soviet. Ronald Reagan used it in communications with the Soviets. Had something to do with some Russian proverb, and he heard that Russians like to speak in proverbs, so he pulled that out of his repertoire of quotes, I guess. But anyway, I digressed. There are three elements that need to come together for fraud to occur. Two of the three elements businesses really don't have any control over, and those two are what drives the action. An employee might need money. They might be ticked off. They might feel like they've been treated unfairly and want to exact some revenge. They might, in the case of management, who can exert some control over the numbers that hit the financial statements, they might feel like they have been exposed to some unrealistic performance goals, and they feel like that the only way they're going to achieve those goals is to cook the books. The other side of the triangle that businesses don't have any control over is how that fraudster, or how that employee reconciles committing that fraud with his own values. I mean, most of us have been brought up to tell the truth and don't steal. So part of that triangle is how the fraudster convinces himself that it's going to be okay for him to steal, and that rationalization isn't, well, I'm not going to get caught. That rationalization really comes before that point. It's what makes it okay with me and my values to take what doesn't belong to me. The one side of the triangle that a business can control is the procedures, the internal control system within a business. Procedures that are set up by management or ownership to make sure that transactions are carried out the way they're supposed to be, that money gets to the bank, that transactions are reported in the financial statements properly. And that is the one thing that a business can do to have some control in this whole fraud cycle, and that is to have really good procedures. And I should have switched to this slide before I did, but there it is, the lack of internal control. It's what gives the motivated employee the opportunity to do what it is he feels like he needs to do. One thing that you can look for in an employee that might give you a signal that something is going on in his personal life. Now these things don't necessarily say, uh-oh, this person's committing fraud. It's probably a good thing for a manager to do anyway, but if you see an employee with lifestyle or behavioral changes, maybe they're talking about staying out late at night and they hadn't before. Maybe they're dragging into work late and they're usually very prompt. Things like that are something that you might just want to be aware of. It doesn't mean you need to start checking his work. But it's important to be aware of it. Or if you have an employee that refuses to take a vacation, most of the time that just means that you have an employee who loves their job and would rather do their job than go on vacation, for whatever reason. Some employees, though, don't take vacations, at least not more than a few days, because they have extra work to do to cover their tracks. And if someone comes in behind them to do the job, or if something falls through the cracks as far as the fraud is concerned, those kinds of things pop up when the employee is gone. If you're a retail establishment and you're looking over your cash register documentation, the tape, if your cash register runs the tape, if you're running on one of the more old-fashioned cash registers and not a sophisticated point-of-sale system, or whatever documentation you are looking at, you need to be looking at it every day. And suddenly you see a bunch of voids coming up where they haven't in the past. That's something to be aware of. In fact, excessive voids that come up suddenly is something to start tracking and start paying close attention to. If you have a petty cash fund and you happen to look through it, and you see that the petty cash custodian, hopefully you only have one at a time, has written a personal check into the cash fund, and that could cover up a cash receipts fraud that's called lapping. That's pretty complex, but it would be something to make note of. And then the obvious would be if you have a cash register and you're getting, at the end of the day, when you balance out the register, you're getting consistent shortages. And I'm not talking 5 cents here or there. I'm talking money that could add up on a regular basis. And then complicating this would be, you've got a bunch of hands in the till at the same time. You wouldn't even know who you might need to suspect. Going back to lifestyle and behavioral changes, excuse me. If your mailroom clerk shows up in an $80,000 Lexus one morning to work, that's probably a pretty significant red flag. And like I said before, the chronic tardiness. If someone's coming to work looking kind of bad, when normally they're okay, and it's unexplainable, it's not a bad cold, or they just haven't finished a round of chemo, it's just unexplainable. You just might want to start paying attention to it. The quality of their work suddenly decreases, or if you have an employee, and this is something that businesses don't notice, maybe suddenly they're working more, or their work is really, really neat, where in the past maybe it was just average. They might be redoing transactions. They might be going back and changing things, and that would be something just to make note of. As far as what's going on with your employees, it's very important just to stay plugged in, or make sure your managers are staying plugged in. I'm not saying, go buddy off with all your employees, but know them, pop in them the conversations around the water cooler or the coffee pot. Just get an idea of what they're like, and the kinds of issues they have in their lives. That just staying plugged in and would help you notice a future anomaly in their personality. I pretty much have gone over the employee never takes a vacation. And if you have a hardworking employee that doesn't take a vacation, and you also need to consider, before you start suspecting anything, what does she do? I mean, if she's not handling money, if she's the housekeeper who comes in and empties the trash, and of course you've got everything else locked down pretty well, you got to take that into consideration. What does this employee have access to? How long has she been with the company? And actually, I am prone to suspect long-term employees quicker than new employees, because the long-term employees know their way around so well. They know their way around systems. They know the people. They know who they can bluff and who they can't. And then again, the lifestyle changes. A good policy for any employee that has some fundamental financial responsibilities is to make sure they take at least a week's vacation every year. Very common for banks to do this. It's also very common for banks to watch their tellers through closed-circuit television. So we don't want to go to that extent yet. But, you don't have to tell them why you're requiring the vacation. Or you can tell them that it's for their mental health, which is also a good benefit of making employees take their vacations. And even implementing a written policy that hopefully is communicated to all employees would help get this procedure going. Cash register documentation, voids, that could mean that someone just doesn't understand how to operate the register. It could mean that they're being careless. But have you trained them? Have they been working the cash register without issues for months, and then suddenly they're having lots of voids and errors? That sort of thing is the type of issue that you would probably want to pay attention to. In a situation when you have several, even more than one, even two employees that are getting into the cash register at the same time, and I'm talking about the same cash drawer even if they have unique sign-ons, just the fact that in a case of a cash shortage, if you have more than one person at a time that's accessing the cash, as far as evidentiary requirements are concerned, uh, you wouldn't be able to press charges against an employee that you suspect. You would have to have incontrovertible evidence that this person is taking money. So what to do? You limit your access to one person per cash drawer at a time, and you make sure that that person balances out at the end of their shift. Some places, I'm sure you've seen, like if Walmart or the grocery stores, at shift changes or someone's going on break, they take their cash drawer with them, and the new employee comes in and puts a new cash drawer in, and that's why they do that. Otherwise, you could get into finger pointing and not knowing who did what. It should be a company policy that you don't have more than more than one employee at a time with their hands in the till. And then camera surveillance. Big retailers do that. They can afford to do that. More and more, it might not be as critical as more people use debit and credit than actual cash. But if you are working with cold hard cash at all, that would be something to consider as a last resort. Management fraud is a little more difficult. Employees with no payroll deductions, more than one employee with the same Social Security number. Those are two indicators of ghost employees, what we call ghost employees anyway. It's employees or names that are getting hours posted and payroll checks cut to them, but aren't real people. There are lots of ways for management to go about doing that. It's fairly easy, especially in sort of a manual payroll system. It can be very easy in a very automated payroll system if everybody in the world has access to everything on the payroll system. But that's something that needs to be addressed with policies and procedures, and it also helps on the back end to have surprise paycheck distributions. In a big company, an internal audit department would do this. In a smaller company with no audit department, top management would do it. You wouldn't want to let department managers have a surprise paycheck distribution because it's that middle management that are probably messing with payroll records, if anybody. But if you're actually handing out payroll checks, a paycheck distribution requires every single employee to show ID and sign for that payroll check. And then any checks that you have left over at the end of the day, of course, you make sure that someone's not just out sick or on vacation. But you further investigate to see what's going on. Another red flag is not necessarily a sign of management fraud, but it's certainly a sign of management negligence, is that the bank accounts aren't being reconciled to the general ledger. That's an extremely important control to know what's going in and out of your bank account, and it is not something that you really want the people who write the checks or deposit the checks to do. You would want someone a little higher up or someone independent of that procedure to actually do the reconciliation. Nonsensical journal entries, that's something that occurs more at year end, maybe quarter end. And you see those things come in to play when managers may feel like their division hasn't made enough money for them to get their their bonus. I've actually seen this happen. Just unexplainable journal entries that are moving money around, maybe posting a payroll expense to payroll accruals, which is a balance sheet account, instead of payroll expense, which is a P&L account, and by doing that, they're forcing a higher bottom line. And it gets complicated, and if you're not an accountant, that's hard to wrap your mind around, probably. I know a lot of business owners that I've dealt with are really good at what they do, but they're not accountants, and they don't understand the difference between the entries that affect the balance sheet and the entries that affect the income statement. And the excessive adjusting entries at year end, that's again just moving stuff around. Disproportionate accruals. If you're not an accountant, I don't even know how to explain that, other than by using the same example I used a second ago, and that was with payroll. Just posting your payroll expense to a balance sheet account instead of your income statement. Or if you're trying to lower your bottom line for tax purposes, you can do the other thing. You just have to look and make sure that everything on the on your financial statements is making sense, and that you have to look behind the financial statements and see what kind of information is flowing into them. Vendor and purchasing fraud. A lot of vendors are going to have you mail their checks to a PO box. That's very common, but you also want to make sure that that vendor has a physical address. You don't want any vendors on your master vendor file to be operating out of their mailbox. It's fairly common practice, and sometimes it involves collusion between an employee and a vendor, and that is extremely difficult to find. But fictional vendors on the vendor master file are not an unusual event. For one thing, they need to go through sort of a vetting process to get on the vendor master file. And you need to just be aware of who is in your vendor master file. You need to look at unmatched invoices. If you have good AP procedures, you're not sending checks out to vendors unless you have an invoice and a purchase order and hopefully a receiving report, and or a level of approvals that every invoice has to go through. And at the end of any given period, taking a look at those unmatched documents might give you an indication that something is not on the up and up. Or suddenly see an increase in inventory purchases, but you haven't had an increase in inventory, or you haven't had an increase in sales of those items that have been purchased, or there hasn't been an increase in the need. You just got to look at the entire organization to see the justifiability, if that's a word, of sudden increases in purchases. And that goes to with the incomplete shipments from the same vendor. If it's a fictional vendor, he might actually be shipping a little bit of the stuff you've purchased and then trying to invoice you for all of it. It's just, issues to be aware of. It could signal incompetence on the part of the vendor. It could signal maybe an AP clerk or a purchasing employee is being a little slack, but it's stuff to pay attention to because it could indicate something much more sinister is going on. The last two slides, IT security and physical security. I'd say if I went into a business to do an overall assessment of their fraud risk, one thing I would look at is whether or not they have a security policy with respect to their IT or their information technology. If they don't have one, suddenly, there's a red flag going up in my head, especially if they're keeping a lot of information, customer information, employee information on a server. The ideal, of course, is having an IT security policy talking about who gets passwords, who gets what kind of access, and regular employee training. I think most larger companies have employee training at least once a year about, when to. I wish the Department of Revenue for South Carolina had this training about what kind of emails to open and what kind to ignore. There are lots of phishing and spearing type of schemes out there where hackers are trying to get into systems of big companies. You think South Carolina Department of Revenue was huge. But they're also trying to get into smaller companies, especially healthcare. From what I understand, healthcare and education are big targets lately. Password policy. You want to make sure that everybody has a unique password. They don't share their password. Hopefully they don't write it down on the ink blotter under their computer, under their keyboard. That they change it on a regular basis, and that it's limits their access to whatever it is they absolutely have to have access to and nothing more. No disaster recovery plan. That deals with backups. What are you going to do if a tornado comes through this afternoon and wipes out all your servers? Have you backed up somewhere else? You're not backing up, I hope, and putting the backup device in the drawer of your desk. If it's small, you can back up to a flash drive and put it in a fireproof safe. But there's got to be a plan, and that plan, the level of backup and the level of security, of course, is proportionate to the kind of information you're backing up and how important it is to your business to keep going in the event of a disaster. And like I said, access to systems needs to be strictly differentiated based on the need to know. You don't want everybody having access to everything. If they don't need access to inventory, don't give it to them. Just give them access to accounts payable. And that is common sense kind of stuff that a lot of businesses just don't think of. Physical security. This kind of stuff is sort of no-brainer, but there's still a lot of businesses that don't do it. Is there a security system on the facility, on the building where everybody works? If you have a security system beyond locking the doors, does everybody have a unique code? Or does everybody use the same code? And has that code been in existence for the last 10 years? So therefore, everybody that's working now and everybody that has worked for your business in the last 10 years has access to your facilities. And again, you need to grant access to certain areas within your facilities just to people who need to be there. Same with distribution of keys. You need to know everybody who has a key to your building, everybody who has a key to each office. You need to make sure that everybody needs those keys. And you need to make sure you know who they are, what keys they have, and that when they leave their employment, you get that key back. If you don't, you really have to get all your locks rekeyed. Well, you don't have to, but it'd be a smart thing to do. When employees do leave, it's important to have a policy already set up to address what it is you need to recover from that employee and what kind of access needs to be terminated that day. Even if the employee leaves of his own accord, you can get into all kinds of trouble when you don't recover door codes and especially passwords. If they continue to use their access after they've left employment, they could really mess things up. And it's good to have passwords that you know what they have access to and how to terminate that password right away. And the last thing in physical security is just, customer credit card information. It might not be stored on your system. If it is, I hope it's encrypted. I hope you just have the last 4 digits. But I've run across a number of companies whose salespeople store their customers' credit card information on a list, a handwritten list, in the top drawer of their desk. The desk that doesn't lock. So that's not a good idea, with PCI compliance being top of mind now for the payment card industry. If there were to be a breach of a customer's information, credit card information, and somehow it's traced back to your company, or maybe they've just identified your company as someone who keeps their credit card information on file, you could find yourself in a heap load of trouble with lots of fines to pay. It's important to let all employees know about PCI compliance and what it means and what their responsibilities are. And that's it. That was longer than I thought it would be, but I'm ready now to take questions if anybody has anything.
Okay, Kelly. Well, I thought that was pretty interesting and an awful lot of information. As a small business owner myself, it does kind of make you think about things. I do have a couple of questions here. So one of them is from one viewer: if I have an employee that I've trusted for a very long time. They've been with me for a long time, but I know they've got a family situation going on. Should I be concerned about that employee, being at risk for getting into a fraudster situation?
Well, it depends on what that employee has access to, and has the situation caused a change in their behavior. If that employee is making deposits or posting payments or picking up the mail, especially if they're doing a couple of different things, that can conflict, that give them the opportunity. I guess that's what I'm trying to say. Look at that employee's responsibilities, and before you jump to any conclusions, would that employee even have the opportunity to do something?
Mm-hmm.
Maybe they wouldn't. If you feel like they have, you might want to just look for signs that they have or have not taken advantage of the opportunity. And I'm trying to think right off the top of my head, It would depend on exactly what that employee does. But have you seen any inconsistencies in their work? Any inconsistencies in the information that they're producing? Um, you hate to say, well, jump on them if they have that opportunity and they have a situation. Um, we still don't know that they've got the third side of that triangle.
Right. So it's more about the behavior. Does the behavior appear sketchy suddenly in conjunction with a potential
Right.
opportunity, family
Right, and just
situation?
increased awareness on your part is going to help. It might
Mm,
not, maybe she's already doing something, but if you're suddenly aware that the possibility exists, you might be able to maybe change your procedures a little bit, or just, monitor things a little more closely and see,
right.
find out what's going on that way.
Okay. Um, you kind of touched on this a little bit, but I think this is something that a lot of businesses would have would be asking themselves. If you see your employees, particularly in the retail environment, if you see a lot of errors or a lot of voids or a lot of issues with the register, how am I going to know if it's a fraud situation or a training issue or a carelessness issue? How do I sort of differentiate those things?
Well, were they trained? I mean, if they've been trained well or not. Have they been able to operate the register for a period of time without those situations or without any irregularities? If they have, and suddenly they're making errors and you're seeing more voids, think about the circumstances. I mean, did you see a bunch of voids on Black Friday, or was it a day just like any other day of the year?
Mm.
You could also just hang around the cash register a little more when when the store's open and see. Maybe your presence suddenly stops those voids, and maybe I mean, it's that they stop is good, but you don't know if your presence is just making them be more careful, or your presence is making them not steal any money. So you just, in situations like that, you implement some procedures. Like if you've got more than one employee in the drawer at a time, you might have to come up with some new responsibilities, or let everybody keep their own separate cash drawer. And it really depends on the system you're using, your procedures. But you use your common sense and pay attention. I think if you just are aware, you've noticed the voids. This time last year, you might not have noticed the voids, but now you've noticed the voids. So you know that something might be up. So pay attention, see what's going on, hang around, watch the way they work, um, and see what happens. And in the end, you might have to just make a decision about it and move forward, or you can call a really good fraud investigator to come in and help you out.
Okay.
That was
I
a
came
non-answer.
across some
I'm
interesting
sorry.
statistics that I just thought I'd throw out before the last question, which kind of relates. That this is from the Association of Certified Fraud Examiners, which is the sponsor of International Fraud Awareness Week, and they say that small businesses with fewer than 100 employees, so that's like the bulk of businesses actually out there, are victimized by a fraudster, who are victimized by a fraudster, are usually stuck to the tune of about $150,000. That 5% of all revenue that is being produced by business annually. That's about $730 billion. That's 5% is lost to fraud. And 80% of the people who get nabbed in these fraud situations are coming out of 6 departments: accounting, operations, sales, management, customer service, and purchasing. So, so it's a pretty widespread problem, and it seems to me. And if if you think that everything is hunky-dory at your business, hopefully that's true. But certainly bears a lot of watching. And this last question relates to a situation that I think a lot of businesses find themselves in. You talked before about the internal controls and a lot of division of labor. Division of labor is an expensive proposition for a small business. So what would you recommend for a small business, a 3 to 5 person business that relies on the willingness of its employees to go the extra mile, do the extra work, pick up the mail on their way to work, make the bank deposit on their way home, do a little extra work to help us so that we don't have to go out and hire another person? How does that size business handle the internal control situation?
Well, in situations like that, you divide your responsibilities on the front end where you can, and on the back end, you have procedures that hopefully will detect any irregularities. The business owner and upper management, hopefully the ones that don't really have any financial responsibilities, have to stay very plugged in to what's going on. If someone else is taking a deposit to the bank on a regular basis and they're also posting payments and opening the mail, that business owner really needs to be aware of that opportunity. They might completely trust the employee, and they probably can trust that employee, but the owner needs to be watching closely the bank statement, or all these deposits look right. The employees who take in money need to be writing that down. If they're opening mail, and someone's got to do that, they're opening the mail and payments are in the mail, they need to make a list of what the payments were, and they need to give that list to someone else besides the people that are taking the money to the bank. And if you have more than 3 employees, that can happen. Every business is different. A lot of businesses, have real unconventional ways of doing things that keep those responsibilities separated, but it comes down to the owner staying completely plugged in and staying completely aware of what is going on. And in a business that only has 4 or 5 employees, it should be a lot easier for an owner to be able to stay plugged in.
Mm-hmm. Yeah, I imagine the owner has to be pretty plugged in if you have 4 or 5 employees anyway.
Yeah.
Well, I think that's the end of the questions, and we certainly appreciate Kelly's time and expertise on such an important topic. And Kelly, did you have any sort of wrap-up comments you wanted to make, or?
Well, when in doubt, call a fraud investigator.
Like Wessel Accounting, right?
Yeah, right.
And that would be www.wesselaccounting.com.
That's right.
Excellent. All right. Well, I want to thank everybody for viewing or watching, and enjoy the rest of your day. Thank you very much.
Thank you, Laura.